Welcome to All Things Financial with Jack Driscoll. Each week, Jack takes on all things you thought were hard to understand about your finances and makes it fun, easy, but most of all interesting. From insurance to the best way to save your money and squeeze the most out of the dollars you put aside for your rainy day. And now, you have a friend in the money business. Here's your host, Jack Driscoll.
Welcome back again, everyone, to another edition of All Things Financial. We've discussed in many shows on the radio and now brought to you by video so many areas in what I call financial planning, but it's really far more than that. That's why I call the show All Things Financial. It deals with, we've talked about long-term care issues, how to protect for long-term care insurance or self-funding using life insurance. We've talked about legacy planning, charitable planning, estate planning, special needs planning for children, let's say, future generations. We've talked about college financial aid. We've talked about student loans. We've talked about FAFSA. We've talked about 529 plans, IRAs, Roth IRAs, stretch IRAs, beneficiary IRAs, 401ks, 403bs. We've talked about business insurance, workers' compensation, auto insurance, car insurance, all these different areas in your lives, even budgeting. Today, I wanted to touch on a couple areas that most, especially business owners, never think about. And the first one is, whenever there's a weather-related or fire, any tragedy, any claim, let's say, on an insurance policy, we find, in many cases, ruined documents. So I know it's the paperless society. So we don't have any documents anymore. Everything's online. Well, is it backed up? Yes, everything's backed up, you'll say. And then there's a claim, and it's a water damage. It's a flood, or it's a mine subsidence, or there's dirt, who knows, mud, who knows. And all your records that you didn't think you had at your house or at your business are ruined. Now, granted, the most up-to-date electronic records may be preserved because they were already loaded off-site or in the cloud. But for the rest of the documents, many times there's data storage that's ruined. It can be electronic media, it can be paper documents. Same thing for those of you at home. Well, I wanted to share with you, especially for the business owners, there's a coverage called valuable papers coverage. And, we used to think that was only a coverage for businesses who had blueprints or special valuable papers that were valued in and of themselves as hard to reproduce. But now we're realizing over a long number of years, valuable papers coverage needs put on to reproduce or preserve any paper documents, files, and memos, because right after a claim, especially water, but it could be smoke or anything where the documents might have been recoverable using a specialist type of a company, they might be ruined even just a couple hours later. Water's a classic case where it can compromise the whole box of files, where immediately after the water claim, if a restoration company properly comes in that specializes in paper restoration, they might be able to save those documents. Now picture this. Papers or documents are in a box in the basement, water comes in, the box is wet. Immediately, if you look and separate each paper and fan them out or lay them out, you may preserve the ink on those papers. You may still be able to read them. But if you don't, they may all be stuck together, and there may be 20 pages all stuck together, and you'll never tear them apart. That's just a simple example of what I mean. So what you're going to want to consider having coverage for is the money to hire specialists at restoring paper documents if they can get in there fast enough and if you have the money to do it. So recovering valuable papers, I've read a lot of articles on this, and I'll refer to a couple of them here. But I read the insurance journals and all, and there were a couple interesting tips in a number of articles. So the first one is during or following a water loss. And this is from the Insurance Journal. It's an older one, but it's the Insurance Journal National Region. And I quoted from this on a couple shows ago, the same journal. I went through an old one from 2011, and I'm still talking with clients and prospective clients who don't know this information. So I thought I'd bring this article back out again and share it with everyone because it's just as timely. It's in the April 4th edition of 2011. And it says this: during and following a water loss, a standard letter or legal-sized box can absorb and retain several gallons of water. You know, we don't think of this. Who thinks of this? We just go along our lives hoping nothing will happen. But the insurance industry does think of this. And so do the valuable papers specialty firms. Now, saturated documents, it goes on to say, reduce the effectiveness of dehumidification efforts and provide a source of microbial growth. So that's mold. So you look at this and you say, if we have boxes full of papers or files that are all wet and they're trying to dehumidify the building to get all the moisture and humidity out, we're making it hard on them by having all those paper documents. And it's a great place to foster mold, which breathing that causes its own complications, very serious complications in some cases. So we're festering and fostering the environment for mold and ruining documents and making it hard to dry out the whole location. Now, to prevent these problems and any other unnecessary expenses, the article says damaged documents should be removed as quickly as possible. I didn't say discarded. I said removed from the premises as quickly as possible and blast frozen. Get that? I never heard of that before. I had read this article. Blast frozen to arrest or stop or slow down the bleeding of ink and microbial growth. Have any of you ever even heard of this? You know, I'm bringing things to listeners and watchers of the show because most of us have never heard of half of this stuff. That's why I'm bringing it out. Can you imagine that? Blast freezing? Who would even think of that? But the specialty companies do. So we would think of separating it out and drying it out, like I said. They're freezing it immediately and dealing with it later. It's kind of genius, right? But you need to pay for that. Do you have the coverage to pay for that? Is one of the big issues. So it's called valuable papers coverage. You don't have any valuable papers, you might think. And here, that's the endorsement you need on to be able to preserve all your documents. So, vacuum freeze drying and desiccant drying are the most widely used methods of document drying systems. They're two different methods, folks. Again, I don't know anything about this until I read these articles, but that's why I share them with you. Vacuum freeze drying is one method, commonly used method. There are others. And desiccant drying, they're the two most, and they both have advantages and disadvantages. Vacuum freeze drying results in a less wrinkled finish when you're done drying product, and it's usually what they use for books or clay-coated paper is what they say. Vacuum freeze dry chambers, though, are pretty small. Usually, they're pretty small. So you can't handle a lot of volume at one time in one location. Companies using that system exclusively can have a significant backlog following a major loss, so they're sitting out unable to be treated fast enough. Desiccant drying, the other major alternative, is an expandable system. So several thousand boxes or documents can be processed at once. So it allows for faster turnaround, reduces your business interruption, reduces your time back in business, but desiccant drying can cause documents to expand. So it has its drawbacks too. And if you don't use a highly skilled vendor for that, it can get pretty bad. Now, even after drying, these documents that you have may require some additional care. Gamma irradiation. Again, I never heard of half of this before I explored this further. Gamma irradiation may be required to combat biohazardous contamination. Debris, mold, or soot may need to be cleaned from the surface. Reproduction or imaging may even be required. So they may have to reproduce the document, can't keep the old original one, or they're using gamma rays, I guess, to irradiate the documents. Again, you think this might cost some money, folks? You're trying to replicate or restore the papers that you had. You didn't think they were valuable, but now that you think about it, they might be original applications, documents, contracts. You never thought they were of any value. And here's what's interesting. You have all your contents coverage under your business policy, and you have the full amount of coverage, and guess what they'll do? If you don't have valuable papers coverage, or you do, but you only have a basic limit, a lot of package policies give you a basic limit, $10,000, $25,000, maybe $5,000. You say, I have that coverage, And in reality, nowhere near enough. So these are some of the problems. So here are the big questions that we all look at, and I need to look at. Most business owners never even think about this. Does your property policy provide the necessary protection? As you can already imagine, probably not. Rarely is coverage extended to include reproducing or imaging services, as you can imagine. And a valuable papers endorsement is required, but how do you provide and determine the right amount of coverage? How do you know how much it's going to cost? You say, well, you won't know until you know what happens. Well, every business, let's say, has a different need, and every need is different. But let's use some common sense. Are you a medical firm? Are you a law firm? Are you an auto parts distributor? Are you a mechanic shop? Do you think there might be some difference in risk control with a law firm or a medical firm as opposed to an auto parts supplier or a mechanical shop? Yes, of course. So there's your first step. How vulnerable are you, and is your business in this example, and you personally at home, how vulnerable are you to a paper being exposed to the risk of loss? Now, the first thing an agent can do, so you need to contact your agents and say, especially if you're a company, and say, listen, I have a law firm, I have a medical firm, I need your specialists, your qualified document recovery firm, to come out and give me an estimate on how much exposure I have, what they would do if my papers got compromised, what treatment would they prescribe, and how much would it cost, and how much coverage do I need. Now, if your agent says, you might have the wrong agent. If your agent says, I'm familiar with what you're talking about, I have company specialists that can help guide us in this, and get a document recovery firm to come out and give you an analysis of the business and an estimate on the coverage, now you're dealing with a true professional. And that's why I share the show. So that's the first thing you do. And the second thing you do is find out, if I ever had this problem, would you provide the restoration service in-house or off-site? Very few do it in-house. You want one that does, if you can, to inconvenience you as least as possible. But you need to know the differences when you're shopping these firms. Now, step 2, you need to see, hey, do you have any damaged documents now? that you might not know about. So you want to get down and see if there's any mold where you're storing things. Make sure they might be able to give you some preventative measures on if it's a damp storage area, how to protect from any exposure over a long period of time that might not be covered under any insurance policy. Because you remember, most insurance policies cover sudden and accidental types of losses, but not losses that happened over a long and extended period of time or had to do with wear, tear, something like that. When you look at your insurance, if you have a professional look at your insurance, you may see that documents ruined over a long period of time because of mold may not be covered under a policy, whereas if it was an instantaneous water loss, they would have been covered. So do your research, folks. Standard limits that you have on a policy typically just aren't going to cut it, even if you do have some on your basic policy. All right, let's take a quick break. We'll be right back with more.
If you're a business owner or an independent contractor, you know the cost of doing business. You have your equipment, your personnel, advertising costs, and doing everything you can to outdo the competition. But do you run your business, or does your business run you? Your business is truly an investment. Is that investment insured? Jack Driscoll is here to help. At Driscoll Insurance and Financial Services, he provides complete business planning services ranging from property insurance programs to disability, life, hospitalization, and long-term care programs. He not only designs insurance protection plans tailored for your business and protects what is already built, but strives to strengthen your business through providing employee benefit and group programs. It's through this unique combination of skills that Jack has become a valuable resource for business owners and managers. Educate yourself first by going to DriscollFinancial.com and clicking on Business Insurance, or give Jack a call at 412-833-1500. Your business and your employees need you to be prepared, and you need to be protected. Log on to DriscollFinancial.com or call 412-833-1500. Driscoll Insurance and Financial Services. Insure for today. Invest for tomorrow.
Okay, welcome back. We just got done talking about valuable papers coverage, and for you business owners, which was one little known type of a coverage on your policies. But another one is, you may be familiar with the term, but you probably have no idea whether you have the coverage or adequate coverage, is business income or business interruption insurance. Here's the key. If you own a business, or you're in business or representing a business or working for a business, that business needs money, which is its fuel to keep its doors open. Not its building, not its contents, not its people, not anything else. Nothing works without money. Stop the money, people are still there, buildings still there, contents are still there, machinery is still there, business stops. Money is the fuel that keeps the business going. The reason I bring that up, if there's a loss, an insurable loss, or an uninsurable loss, but let's take an insurable loss here, like a fire, or an earthquake, or a hurricane, or a flood, or anything else. You might have great coverage with the business on property, building, contents, workers' compensation, vehicles, everything. And if your business is down while the property is being rebuilt, your building is being rebuilt, whether you're a tenant and don't have a place to go back into yet, or whether you're a building owner or a manufacturing firm or your manufacturing plant is down, no matter what, your survival is an element of time and loss of revenues, because loss of revenues coming in means you don't have any money to pay your people, any money to pay your mortgages, any money to pay your business loans, any money to pay your expenses, any money to pay your car payments. Doesn't matter how much those things are insured for. The people, if you can't make their pays, will be gone 6 to 9 or 12 months later when you're ready to reopen. The vehicles will be, what do they call that? That's right. They're all taken back. The cars got repossessed. The properties got foreclosed on. Even though you had all the property coverage vehicle coverage, workers' comp, medical insurance, everything you needed to protect all of those things. You forgot the fuel, which is the money, stopped coming in until you reopened. You know, there's a large percentage of businesses that are fully covered in the event of a claim that never reopen their doors again once everything's rebuilt and restored, and the company is paying full replacement of the building and the contents and replacing vehicles, and the business is never open. And you can tell why by the theme of this segment on this show. They didn't have income coming in through that whole period in time. Now, there are many reasons for that. Number one, no business interruption coverage. Number two, business interruption coverage, but not pertaining to the type of loss that occurred. I have seen cases where we have business interruption coverage or business income coverage, but the type of loss was a flood, and the business income coverage would have only pertained to fire, vandalism, or whatnot, but not all kinds of loss. Wow. So check your coverages and then check your policy limits. I've talked about that in prior shows. Now, you have to take this very seriously because there's another expense. What if your income is all coming in, and by the time you reopen 6 or 12 months later, all your customers went to the competitor? Because while your income was coming in and you had it insured, your customers weren't getting product. You can't expect your customers, or maybe you can, to go down the street, find alternative arrangements to have their needs met, and especially if you're a supplier for other businesses, and then come back to you when you're open again. They've developed new habits now, folks. That's why they stay with you now. The reason some of your customers don't leave now, they're used to dealing with you. There may be a better competitor right down the road and they still won't leave because people don't like to change. Well, in this case, you need another coverage, piggybacked, called extra expense coverage, and that coverage needs to be of an adequate amount and limit to allow you to resume operations elsewhere at a satellite location to service all of your customers so that their needs are met, even if you're making arrangements with other providers and manufacturers in the meantime to provide product through you so they don't have to leave you, to keep your customers happy and fulfilled, in addition with having all your income coming in. So it's business interruption income and extra expense coverage. Now, one final thing, because we're out of time, you need to check with your insurance people or have us compare for you and do an analysis on your insurance program to see, what if one of my suppliers goes down? One of my main suppliers has the fire, and now I'm out of product for 6 to 9 months, and they're proprietary products, so I can't license with another dealer or distributor, and I can't provide product, and my facility is fine. So you need to see if you have dependent properties coverage. Folks, listen, we're out of time. There's a lot more to go over. It's more than to do yourself. If you need a comparison, you'd like us to do a thorough analysis of your own business, let alone the insurance program that you have, we will be happy to do that. We'll get into an analysis on your business needs, then do an analysis on your business policies, try to help you identify any gaps or areas of concern and what potential and possible solutions are available. Please feel free to contact us. As you could see, our contact information is available, and we'll be back next week. We're out of time again. Thank you so much for tuning in, and we'll see you again next week.
You've been listening to All Things Financial with your friend with the answers to all financial matters, Jack Driscoll of Driscoll Insurance and Financial Services. Securities and investment advisory services offered through Sage Point Financial Incorporated, a registered broker-dealer and registered investment advisor and member FINRA and SIPC. Driscoll Insurance and Financial Services is not affiliated with Sage Point Financial, Inc. or registered as a broker, dealer, or investment advisor. You can reach Driscoll Insurance and Financial Services Incorporated at 412-833-1500, and they are located at 2738 South Park Road, Bethel Park, Pennsylvania, 15102.